first few accounting classes, it's really important to get a good handle on journal entries, debits and credits, because they keep coming up all the time, and accounting to a great extent builds on itself. So if we don't understand debits and credits in the beginning, the rest of the class is going to be kind of a mystery to us. Remember our rules. Transactions that can be reliably measured in dollars are recorded with journal entries. Debit means left, credit means right. One isn't good, one isn't bad. Journal entries always balance. So if there's $60,000 worth of debits, there has to be $60,000 worth of credits in each individual journal entry. Also, assets increase with debits. Liabilities and shareholders' equity accounts increase with credits. Expenses are debits, expenses are debits, expenses are debits. The opposite of expenses is revenue, so it must be recorded with credits. And dividends start with the letter D to remind us that they are recorded with debits. Let's do short exercise 2-3 together. It doesn't ask us to do journal entries, it just asks us for a T account for cash so we can tell how much our balance is. But let's do these journal entries as a review. First of all, this thing here, learning objectives, explain what a transaction is, analyze the impact of business transactions on accounts, that's just the book telling you what the objective of this problem is. It isn't a question for you to answer. So this woman opens up a medical practice and she does the following transactions. First, she invests $60,000 cash to start a medical practice by issuing common stock to herself. When we're learning about journal entries, a great place to start is often to ask ourselves what's happening to cash. In this case, cash from the business's point of view is going up. Cash is an asset, assets increase with debits. The owner is investing $60,000 into the business, so her equity is going up. Equity accounts increase with credits. So we debit cash for $60,000 and credit common stock for $60,000. We do not debit and credit sentences. We debit and credit specific accounts. If we feel compelled to write a sentence, we put it in the memo section, which just tells the next person what we did. Cash is an asset, it increases with debits. Common stock is an equity account, it increases with credits. Next, the business purchased medical supplies on account totaling $12,000. Nothing is happening to cash. This purchase is made on account. That means we're going to pay later. But what's happening to medical supplies? Medical supplies is an asset. Assets increase with debits. We're going to pay later. We didn't sign a note, so that's called an account payable. The only difference between a note payable and an account payable is that a note payable is a signed instrument. When we see the phrase on account, that means it's an account payable. So we debit the asset supplies for $12,000 and credit the liability account, accounts payable for $12,000. Any account that has the word payable, accrued, or unearned in it is a liability account and increases with credits. Notice how we write the debits first, come down a line, indent a little, and write the credits second. The debits are in one column, the credits are in another column. The next transaction is we paid the office rent of $4,700. What's happening to cash? Is it going up or going down? It's going down, so we're going to be crediting cash. And expenses are debits, expenses are debits, expenses are debits. So we debit rent expense for $4,700 and credit cash for $4,700. Expenses are debits, expenses are debits, expenses are debits. Cash is an asset, so it increases with debits and decreases with credits. I'm going to write the income statement accounts in red font and the balance sheet accounts in black font to help us get a clear distinction between the income statement and the balance sheet. Finally, on July 3rd, we record $10,300 of revenue. Some of it we're paid in cash, and some of it we're going to get paid later. When we're going to receive money in the future, that's called an account receivable. We could do this in one compound journal entry, but let's do it in two since we're just learning. What's happening to cash? Someone is paying us $4,200. Cash is going up. Cash is an asset. It increases with debits. We also earn some money. We're going to call that service revenue. We could have called it dental fees. We could have called it revenue. We could have called it sales. It's some kind of a revenue account. If expenses are debits, expenses are debits, expenses are debits, the opposite of expenses is revenue. That must get recorded with credits. Let's pretend like Bob paid us $4,200, but he owes us another $6,100. When we're going to receive money in the future, that's called an account receivable, and that's an asset. Assets increase with debits, And revenue accounts increase with credits. If expenses are debits, expenses are debits, expenses are debits, the opposite of expenses is revenue. It must increase with credits. Now my boss walks in and, just like this question, wants to know how much cash we have. I can't tell just by looking at my journal entries because they're in chronological order. So I'm going to reorganize the data by moving it to T accounts. I'm just moving it over. I'm not changing anything at all. So for instance, let's post this first journal entry to their T account. Cash gets a debit of $60,000 and common stock gets a credit of $60,000. Let's do the second one. Supplies gets a debit of $12,000 and accounts payable gets a credit of $12,000. All right, let's post the rest of them. And once we've posted everything, we can answer the problem's question. What is the cash balance? 60,000 plus 4,200 minus 4,700 means that there's a debit balance of 59,500. We draw a line here to show the world that we've struck a balance, and if it's a debit balance, we write it on the left-hand side. If it's a credit balance, like service revenue, we write it on the right-hand side. So the answer to the question is, how much cash does the business have to work with? It has $59,500. And that's all there is to journal entries and posting them to their T account.